Hello, everyone. Welcome to this small business accounting tutorial. Today, we're learning how to keep a simple cash ledger using a practical example. This is a small business cash ledger for February 2026. The first column shows the date. This tells us when the transaction actually occurred. The second column is particulars. This describes the type of transaction. The income column show money received by the business, while the expenses column show money spent by the business. And we have the balance column. This one will show the remaining cash after each transaction. Now, let us look at how the table work in practice. February 1st, the business is having an opening balance of 50,000 naira. Since this is income, it is recorded under the income column because there was no previous balance. The balance become 50,000 naira. On February 2nd, the business purchased supplies worth 40,000 naira. This is an expense, so it is recorded under the expenses column. We have to subtract this 40,000 from the previous balance of 50,000, leaving us with 10,000 naira. On 3rd February, the business also make a sales of 12,000 naira only. This will be added to the previous balance of 10,000 naira and giving us a new balance of 22,000 naira. On 4th February, it also make another sales of 15,000. This will be added to our previous balance, making 37,000 naira only. In the same day, she paid rent of the space occupied, worth 17,000 naira. Since rent is expenses, it is recorded under expenses column and deducted from previous balance, making a balance of 20,000 naira. On 5th, it is also make another sales of 16,000 naira. This will be recorded under income since it is income and it will be added to previous balance. This is making 36,000 naira only. The same day, the business purchased supply worth 25,000 naira. This is an expenses also, so it will be recorded under expenses column and we have to subtract it from our previous balance, making 11,000 naira only. Same day, it pay utility expenses amounting to 4,000. Also, this will be recorded under expenses and deducted from the 11,000 naira, leaving the balance of 7,000 naira. On 6th February, it also make another sales of 15,000. We have to add it to our previous balance, making 22,000 naira. On 7th, it make another sales of 10,000 and this will be recorded under income since it is income and we have to add it to our previous balance, making 32,000 naira. The same day, the business purchase supplies worth 20,000 naira. These are expenses, so it is recorded under the expenses column. We have to subtract it from the previous balance, making 12,000 naira now. On 8th, it says 25,000 naira, recorded also under income column. And this will be added to our previous total, leaving us with balance of 37,000 naira. The business purchase supply worth 30,000 naira on 9th February. This is an expense, so it is recorded under the expenses column. We subtract the 30,000 from our previous balance, making the balance to be 7,000 naira. And on 10th February, she also make a sales of 18,500 naira. So it is also income, so it will be added to previous balance, making 25,000 naira only. From this ledger, we can clearly see how income and expenses affect the business balance each day. So at the end of February 10, we can see that the business has a balance of 25,500 naira only. This shows why we need to keep a proper cash ledger. It will help our business owner to track their money. It will help them to control their spending and you also understand your performances. So by recording transaction daily, small business owner can avoid confusion and you can make better financial decisions. Thank you all for watching. I hope this example has helped you understand to prepare a simple cash ledger. If you found this lesson helpful, please like the video and share it with someone who may need it. You can also leave your question in the comment section. I will be glad to respond. Don't forget to subscribe for more simple and practical accounting lessons. Thank you for watching, and I will see you in the next tutorial.